I'm Greg Hunter. Welcome to USA Watchdog. I know our week is a little messed up this week in terms of my posting stuff, but when I see something really important, I try to put it out there and I try not to hold it. And one of the things I've been watching in the markets are all these signals about the gold market. I mean, we've had, we found out is that that was delivered back to Germany between France and the U.S. was 37 tons. We were supposed to deliver 50 tons. Of that 37 tons, the U.S. only delivered 5 tons. It's been reported. We're supposed to give them 50. We have 1,500 tons of German gold, and we only could muster 5 metric tons to give back to Germany. They have to be upset. And so what I'm here talking about today, or having on today, is Paul Craig Roberts. Dr. Paul Craig Roberts, thank you for joining us today on USAWatchdog.com.
You're welcome.
And I want to just continue your introduction a bit. You have a PhD in economics. You're a former Assistant Treasury Secretary in charge of economic policy in the Reagan administration. You've been an editor for the Wall Street Journal. You're a real guy. And when you
thank you.
So I'm just skimming over your resume. I mean, you have a much deeper resume than what I'm saying. You're also the father of Reaganomics. So you've been involved in economic policy in a very high level in your career. That said, you co-authored an article about gold, and with all of these little pieces and bits of information about gold, just something in my head just says, wow, there's a lot of information, a lot of stuff about gold. And you come out with this long article you co-authored. You don't need a co-author. You can write on your own, just perfectly fine. But you got together with someone who is a professional trader who could back up your assertion that, the gold market is manipulated. And we just had the top German financial regulator, Elke Koenig, say, oh, the gold market is rigged worse than LIBOR.
Much worse.
Yeah, we're looking at some big going-ons in the gold market. Why did you think it was important enough for you to go out, write a much longer article than you usually write? You write long articles. Why did you think it was necessary for you to co-author this with a professional trader about the gold market now? Why?
Well, the Federal Reserve has been manipulating the gold market for decades. And that's what happened to America's gold. The Fed leased it all out to bullion dealers over the years, over the decades. And the bullion dealers sold it, and it was part of the policy of holding down the rise in the price of gold. If the Fed had not put all of that gold on the market over the years, the price of gold would have risen much sharper and much higher. And the problem for the Fed is if the price of gold is rising consistently and strongly relative to the dollar, it implies that the dollar is losing value. And that also applies to the dollar's exchange value to other currencies. So they were always faced with the policy of protecting essentially an American inflationary monetary policy against too much depreciation of the dollar's exchange rate in currency markets. So that's why they were leasing the gold. Now, they don't have any more gold. That's why they can only give Germany 5 tons of its 1,500. In fact, when Germany asked for this delivery, I think last year, the Fed said no. But we will give you, over the next 7 years, we'll give you 300 tons of your gold. So we'll give you back 20% of what you trusted us to keep for you over the next 7 years. But they're not even able to do that. So, and we see the same thing. The stocks of gold at the Bank of England, they seem to be disappearing. The stocks of many of the gold trusts, such as GLD, are being looted by the bullion banks who buy up the shares, convert them into gold. And all this gold is disappearing into Asian markets in order to meet the purchases of China and India and other countries. So the entire West is being drained of gold.
I want to interrupt right here. When you wrote this article, and I want to get back to the entire West is being drained of gold, so hold that point. I want to come back to that. So do you think, I mean, you wrote this article, and I got this I don't know, this ping that said that he thinks there's an inflection point. You must, am I getting the right message from you that you're saying?
Yes, of course. Now, and the reason is, the ability to supply large amounts of gold to bullion dealers to sell has diminished with the supply of gold. And so what the Fed did, they turned to massive naked shorts of gold futures contracts in the New York COMEX market.
Because they don't have the real gold to sell anymore.
They don't have the real gold, so they dump at the least opportune times of day when the market is very lightly traded. They come in and dump contracts that, say, in a period of 6 minutes, are 3 times greater than the amount of physical gold COMEX has to make delivery. So when they dump these contracts, it drives down the price of gold. That's how they've got the price of gold down from $1,900 to $1,250. They've sold all of these sort of naked shorts. Now, the trouble is that when the Chinese or somebody buys gold, they won't deliver it. They don't any longer agree to leave it at the London bullion market vault, or the Fed's vault, or the COMEX vault, or J.P. Morgan's vault. They say, all right, we bought it, send it to us now. And so to avoid default on gold delivery, they've had to borrow clients' gold. I mean, a lot of people think they have gold, but it's not there anymore. The Fed has delivered it to the Chinese.
They didn't borrow it, they stole it.
They stole it.
And you're saying that, back to your point, so all this gold is heading over to the east, mainly to China.
Yeah, it's mainly gone. But the point...
Wait, stop. Wait, so the America's gold, you're asserting, is gone. Our 8,000 tons, poof.
They obviously don't have any, because if they did, they would have given Germany's gold back. If they had any, they would let people audit the vaults. Congressman Ron Paul tried to be allowed to go see if the gold was there, and they said, no, you can't go look. Well, why? If they had the gold, they obviously would let him see. There's no audits. And so, but what the point is, the ability to keep selling these naked shorts is now disappearing, because there's no gold left to back it up. In other words, the GLD, which is a gold trust where you buy shares and you allegedly own your share of the gold, its holdings of gold used to be vast. Now it's down to pittance. So none of these ETFs have the gold to back the shares, and the ability to continue looting them in order to make good on gold delivery is running out. And so this then will prevent the Fed from being able to sell naked shorts to protect the dollar from its policy of quantitative easing. That's what it's all about. You can't print 1,000 billion new dollars every year without causing other holders of dollars to wonder about the value of the money and to seek a way of getting out of it. And China has been doing that by going into gold. Of course, the world supply of gold is not very large. The annual production is not very large. And if the Fed has exhausted the 8,000 something tons that the United States had, plus...
And wait, I want to clearly get this. I want to get this clearly on the record. You saying that what has happened? What do you think? How much of the 8,000 tons, 8,002, whatever? How much of the 8,000 tons that America says it has? How much do you think is left?
Well, apparently very little, because they could only give Germany 5 tons. So
you think we don't have?
I don't think
hardly any.
I don't think they have any, and I think the ability to borrow it from the vaults of the bullion banks, to loot it from the gold trust. I think these are also running out. And so, but you see, this is what the gold traders think, or most of them, because there's no other explanation. Look, in 2011, Venezuela caught on that the gold was disappearing. And so Chavez said to the Federal Reserve, you're keeping 160 tons of our gold. We want it right now. It took the Federal Reserve 4 months to find 160 tons to give to Venezuela. And that was in 2011. Well, since then, it's gotten much worse because they can't deliver 300 tons to Germany.
Over 7 years.
And so obviously,
they couldn't give 50 tons in 1 year. They gave 5. They gave it 10.
5. So they're way behind, even on that partial delivery that they promised. And there's no reason to be behind if you have the gold. And there's no reason to sell all these naked shorts if you've got real gold that you can dump on the market. You don't need to engage in illegal behavior. I think naked shorts is illegal. But of course the Fed is not going to impose a law against itself. So just like a policeman isn't going to arrest himself. So I think on the whole, to answer your first question, the reason I wanted to team up with Dave Kranzler is he sits every day and watches the trades and can produce the statistical evidence that show the massive amounts of gold futures contracts that are dumped on the COMEX at the least opportune time of the day. No real investor would get rid of his position in that way. You don't just show up with 30 tons and dump that gold all at once on the market when it's lightly traded. That's how you maximize your loss. And the only reason to do that is to maximize the downward impact on price. A real investor would disguise. He would sell a little bit at the busiest time today, a little bit at the busiest time tomorrow. He wouldn't just come in and dump it all at once when there's hardly any trading going on. You only do that in order to drive the price down. And no investor has the incentive to maximize his losses. It's only the Fed trying to drive down the gold price that would take those kinds of losses. And of course, the Fed can print the money to pay for it. So it's clear, and what we illustrate in the article with the chart, we show the specific times of the specific days and the specific amounts of futures contracts that are dumped into these very lightly traded periods. And so that's not information that's available to me. I mean, I can know that's what's going on, but Dave is able to prove it. He's able to produce the actual trades by the minute.
You're saying that without a doubt, 100%, the gold market is manipulated. There is no gray area. There's no I think. There's no maybe. No. There's no possibility. It is being manipulated, according to a former Assistant Treasury Secretary, Ph.D. in economics. Is that right? Is that what I'm supposed to get?
That's exactly right. It's being manipulated. The emphasis I've placed on it is new, and it's in terms of the future, naked sales of futures contracts. But gold traders have known it's been manipulated for decades.
This is criminal.
Because of the sale of the actual gold bullion itself.
This is criminal, though.
I would think it is, especially if you. I mean, I don't know what authority the Fed has to sell the U.S. gold, but I wouldn't think it has the authority to sell gold that it is keeping in trust for Germany and other countries. That would seem to me to be theft, and I don't think that it's legal, but I don't know, for the bullion banks like J.P. Morgan to help the Fed drive down the price of gold by selling the gold to people, of private investors that it's keeping in trust. And I don't know that it's illegal. I wouldn't think it would be, but I don't know this type of law, that it's legal for the bullion banks to go in and buy up shares of the gold trusts in the wake of the Fed having pushed the price down with naked short selling, and then take those shares and demand from the trust the gold that they represent, and then put that gold into the market, either to ratify the price the Fed has driven down or to make deliveries into Asia. All of this seems to me to be theft. But there's no doubt whatsoever that the markets are manipulated, and we have further evidence from Deutsche Bank, the big German bank, under investigation by Germany for fixing the gold price in the London market, along with these other people, just like they fixed the LIBOR rate. They also, it turns out, fixed the daily opening gold price in the London gold market. And Deutsche Bank says, we don't need this. We're no longer participating in fixing the gold price. So we see that these banks are all now under investigation for LIBOR-type offenses. And we also see the Congress now holding hearings into the banks' rigging of all the metals markets. Now, they're excluding gold and silver from this because it's probably too explosive. But they are, the American banks are now under investigation in Congress for rigging various metal commodity markets. So there's nothing startling or unusual about the fact that these markets are being rigged and have been for some time.
So you think we are near some sort of inflection point? Now, I'm not a trader, and I don't give trades, and I don't sell anything on my site. But I have to, the next question has to be, everybody's sitting here thinking, so what about the price? Where is the price of gold going? It's kind of like, what is the last working parachute on a plane that's on its way to crashing worth? Where is the price of gold going then, in your estimation? Not that we're trying to call a market or give somebody a trade, but if it's $1,200 and something an ounce at this juncture, then that's way too low in dollar terms. Am I wrong? Where is the price going?
I would think that if the dollar comes under trouble, that is, its exchange value, if the dollar starts falling, and people in the West, Americans, for example, try to move into gold, the tiny supply available means the price will just go through the roof suddenly, instantly, because there's no gold left to absorb a substantial increase in Western demand. The demand that's being satisfied is the Asian demand. And so the imports in China are massive. And India, which the government came in and restricted imports of gold to try to help the Fed keep this thing going. Now it's the silver. So the silver is pouring in India, the gold is pouring in China. And so if people in the West try to move from dollars into bullion, there's not any to speak of. And so you would see a massive rise in the price of gold.
And how about silver? If people will, obviously, well, if they can't buy gold, they'll try to buy silver. What about silver?
Well, I don't know. I don't have the same information on supply of silver, but it is now a lot of it being drained off into India because the Indians are moved to silver from gold because the government put import limits on gold. And so the Indians said, okay, then we'll get the silver. So the silver going to India, gold's going to China. The Fed apparently has none. It had a hard time making a small repatriation of the Venezuelan gold. It's unable to repatriate the German gold and can only deliver five tons. Now, 5 tons sounds like a lot, but the Germans had on deposit with the Fed 1,500 tons and thought it was safe. And the Fed was being fair and honest and above board, and now finds out there's no gold there.
And you're saying, so what do you think's in Fort Knox?
Apparently nothing.
There's no gold in Fort Knox. That's what you're saying.
Well, I can't say that because I haven't gone there to look. But since they can't repatriate the gold of the country's central banks who trusted them to hold it, and since they won't allow an audit and they won't allow even members of Congress in to see if there's any gold there, then I take that to mean there's not any. Because why else would they not be able to send the gold back? Why else would they tell Congress, no, you can't have a look? Why else would they say, no, we're not going to have an independent audit? There's no reason to do any of those things except to hide the fact that there's no gold. Now, they're not.
This is a big point.
They're not stand up and say, oh, there's no gold. They'll never say that. But they certainly can prevent anybody from finding out. So I am not permitted to go there and look, and so I can't say there's none there. All I can say is there's every indication that there's none there.
In Fort Knox.
Or in the Fed's vault at New York. Or anywhere.
You think America, period, whether it's Fort Knox, the Fed, you think America, other than deep storage, gold in the ground, you think America is out of gold? Well,
you have the annual production. They apparently have enough to mint the gold and silver 1-ounce coins. But they apparently don't have enough to repatriate to the countries who were storing it here. And they're beginning to have serious difficulties in meeting purchases of large amounts of gold. So if a foreign central bank goes to London, buys a huge quantity of gold, they are experiencing difficulties in making these deliveries. So this is an indication that the West has used gold for enough years trying to suppress the price that its supply is largely depleted. It doesn't mean there's not an ounce of gold, but it means that the sales of gold to people who won't deliver it, as opposed to people who just buy a paper contract and are willing to settle in cash. You know, the difference in cash, did the price go up, did it go down? I don't want the gold, I'm just speculating on this market. But the people who purchase gold actually demand delivery. They're having trouble making these deliveries. And the known stocks of gold, like GLD's gold, COMEX gold, the Bank of England gold, Fed gold, the London bullion market gold, these stocks seem to have largely been depleted.
Final question. In your opinion, do you think this is going to be an inflection year for gold and silver? 2014, will it be an inflection year for gold and silver based on your research, in your opinion, as a top a financial official in the U.S. government?
Well, we didn't have these problems in my day.
Still, question remains: Is 2014 and it is 2014 an inflection year in your mind for gold and
Greg,
silver?
who knows what they can come up with next? Who knows what the Fed can come up with next to keep this going longer. It's already gone longer than I thought possible. I think this year we're going to see a further downturn in the economy. The signs are that not only do we have no recovery, but it's going to get worse and it's going to show up. So if the economy turns down worse, the Christmas sales were very negative. There's no growth in people's incomes. There's no jobs. So if the economy goes down further, what does that mean? It means the deficit widens. It means they have a greater debt ceiling lift. They got to have a bigger debt ceiling increase. All of this will alarm the world. The world will say, good heavens, they already had $1 trillion deficit. Now it's gone up. And the Fed can't stop quantitative easing without the stock and bond market collapsing, without the bank solvency becoming an issue. And so here the world is watching a bigger deficit, more printing of money, and they are likely to start dumping dollars. And when they do that, the usual effect is that people say, what are we going to do? Well, if gold won't go. And there's not much supply to meet the demand, the price has to escalate. So I wouldn't be surprised if that shows up this year. If the Fed can keep things going another year, who knows? But they can't keep it going another 5 years. It can be done. Now, they may pass a law that no one's allowed to own gold. They may do that.
Well, that's going to be an awful big hill to climb.
Under President Roosevelt, Americans couldn't own.
But they're going to sell all these gold coins to America, and then they're going to pass a law and say, yeah, give them all back. Yeah, it's illegal. That's going to be an awful
That's what President Roosevelt did. We had gold coins in circulation. You had to turn them in.
But they were $20. We actually used gold as money in a $20 gold piece.
Yeah.
But not now.
$1, $5, $2.50, $10.
Oh, yeah. That's going to be a tough climb. We sold you this since '86. Now it's all illegal. Woo! That's going to be a tough one.
If they can make the official money of the country illegal, they can easily do that. As I said, they've already done this in the 1930s. So they may do it again. They simply say, we have to do it to protect the dollar. I don't know what they're going to do. I'm surprised that they're selling naked shorts to drive down the gold prices. If you and I did that, surely we'd be arrested. So what they do, I was surprised when the President of the United States announced he had the right to kill American citizens without due process of law. The Constitution doesn't give him any such right. This is an act. This is a criminal act. It's murder. Where did the president get off? That, I can go murder citizens. I don't have to give any evidence or any trial or any conviction. I was surprised at that. But so who knows what they're going to do, Greg? I can't. The things they've done are below the mind already. So what will they do next? I don't know. If they don't find some new way, I expect that they've used up the available gold for the manipulations, or just about have, and so the ability to stop the rise in the gold price the way they have been doing for years, that ability is disappearing. And so one would expect the gold price to rise and the silver price to rise. That's just the logical conclusion. It's unavoidable.
Dr. Paul Craig Roberts, thank you so much for coming on today and telling us, giving us this warning, basically, that the gold and silver manipulation game is apparently ending. Would that be a good summation, that the gold and silver suppression game is clearly showing signs it's ending?
That's right. The ability to continue in this way seems to be running out.
Dr. Paul Craig Roberts, thank you so much for, again, coming on USAWatchdog.com in short notice to give us this special additional interview that I'm going to post on USA Watchdog. Thank you very much, sir, for taking your time to warn Americans about the inflection point that we're seeing in the gold and silver market, and thus the money of the nation. Eventually, what this means is the buying power of the money is going to be depreciated, and this is an inflection point. Thank you, sir, for coming on.
Thanks for your interest, Greg. I appreciate it.